Hello traders, welcome back to the channel. If you are in loss, your trades are not profitable, or you are trying to recover your losses, this video is for you. Watch it till the end. This video will help you how to take trades, recover your losses and be profitable. With that, let's start the video. Before we proceed with the video, if you are new to the channel, I highly recommend you to subscribe and hit the bell icon. I post regular contents and stock analysis on Dubai Financial Market. Coming to the point now, basically there are three good reasons why retail traders are not in profit, or their trades are not working out, or they are sitting with losses. We will go to the charts. I will give you good examples so that you can understand and try to correct yourself. The first and very basic mistake retail traders do is they buy a stock when it's in a downtrend. Let me give you a good example. I'm sure you will relate to it. Most of the traders, when they see the price, it's at 3 dirhams now, what they think is, let it come down, I will buy it. When it comes to this level, say around 2.85, they think yes, it have come down from 3 dirhams to 2.85. There are good chances it will go further down. Now listen to this very carefully. Now when the price comes, say around 2.80, okay, so what a retail trader thinks is, when the price was at this level, that is around 3 dirhams here, they wouldn't enter the trade. Why? It's expensive for them. When price came at say 2.85, they will still not enter. They will think price is still higher, it will come down. Sure, it's coming down because the trend have changed. Again, when the price comes at 2.80, what they think is, yes, this is good time to enter the trade. But overall, as you can see, market have broken the support level, that is around 2.85. It's going to the downside now. When they enter at this level, say around 2.80, what they think is, okay, I have got a good price, market is trying to bounce, let me enter the trade. They enter the trade not knowing it's a reversal, it's just a green day in the market, we are in a downtrend as of now. How do we identify if we are in a downtrend? I did make a separate video on this one. I will put the link in the description box, check that one out. But just to give you a quick recap, market is in a downtrend when we see market is making lower lows and lower highs. This is a clear indication of a downtrend. It goes in this way. Let me move down to 3 hours chart. I will show you the clear pattern. Let me adjust the chart and let me remove the drawings. Here, now we can see exactly the same pattern. This was the price at around 3 dirhams. It got back. This is the support level. It broke the support. It took a bounce again to the downside. So now what we are seeing is a lower low and lower high. Again it went up, got rejected. Again it came down. What pattern is this now? This was the previous high. This is the low. This is the new high now, which is a lower high. Again it made a new low. This was the previous low. This is a lower low. So similarly, when we see this pattern, we can clearly say market is in a downtrend. Now let me move up to the daily chart again so we can continue where we were. So what I'm trying to say is, retail traders are always late to join the party. Let me give you another example. Check here. When the market was at this level, say around 2.385, they wouldn't enter. They would be thinking price would come further down, let me enter at cheaper price. The only problem with a retail trader is he always chases the price. He thinks when the price is to the downside, I will enter the trade. But not knowing the trend have already changed, we are in a downtrend, it will go further down. We always have to buy it with the momentum when the market is in an uptrend. How do we identify an uptrend? We want to see exactly the opposite patterns. Let me show you. We want to see market making higher highs and higher lows. This is a clear indication of an uptrend. When the market is in an uptrend, we buy at the support right here and exit at resistance. Again, we re-enter at the support level, we exit at the resistance. Easier said than done. We have to know how the candlestick pattern works. If you know how to read candlesticks, clearly you can enter the support and exit at resistance. So this was mistake number one that retail traders do. How to avoid this one? Always follow the trend. If the market is in a downtrend, you know how to identify a trend now. Never enter the trade. Always look when the market is making higher highs and higher lows. So trade with trend. Trend is your friend. The second mistake is retail traders never use stop loss. Say for example, we know that this is a good support level for Emaar, say around 2.85. Whenever price came at this level, it took a bounce. Dodgy candle right at the support level, it's good to enter the trade. Again, second time we saw a hammer candle at the support level, it's good to enter the trade. Your target is your first resistance at around 3.00. Now what happens is, when a retail trader enters the trade at support, at this level, he never uses any stop loss. Once you enter the trade, your priority should be to protect your capital. Trader enters at 2.85, the trade did not work, still he continues the losses, he sits with the losing position. This is where you miss out other opportunities in the market and you increase your losses. So my advice, whenever you are taking any trade, please keep a stop loss. If the trade is not working in your favor, it will just hit your stop loss, but your capital will be protected. And you can enter the market again when you see a good setup at a right level. Third mistake is taking huge positions. I will use the same example again. Say at this level around 2.85, a trader enters the trade. Now what he does is, he sees the price, yes, it's at the support level, market is taking a bounce. He enters the trade with full capital. At the same time, he does not use any stop loss. Now check this one out. Market does move in his favor. It just takes a bounce, gets rejected at the resistance level and starts moving to the downside. Now what will happen is, first thing, he have taken a trade where the support is broken. Second thing, he does not use any stop loss. Third thing, he have taken huge position. Now the trade is not working in his favor, but he can't quit the position because of huge losses that he is seeing. So what he does is, he keeps waiting for the price to come back at the same level so that he can exit at break even. But check what, as I discussed earlier, trend have already changed. Market is doing lower lows and lower highs, clearly indicating it's in a downtrend. I will show you another example how to enter the trade at good level with good quantities. Let's say market was at this level, say around 2.40. You did not take the trade, you are waiting for it to come back for a retest. It shoots up, you are waiting for the price to come back now. You are seeing a price pattern, finally you think of entering the trade at this level. Why? Because you are seeing price accumulating at this level, it broke the first resistance, it means it can be a good start to the upside. Enter the trade when it crosses the resistance level right here. Only use 30% of your capital. Do not enter with 100% of your capital, it will never work out, you are risking too much. When you enter the trade with 30% of your capital at this level, you still have 70% to take another trades. Say when you enter here, you saw resistance is broken, the first resistance is broken, trade is working in your favor, again you can enter with 50% of your trade. This is how you add positions to your winning trade, never add positions to your losing trades. People try to average out, that does not work. Again, when you see market breaking new resistance, you can enter the trade with balance of your capital. Your last target will be the previous swing high, that is around say 3.00. So this is how you add to your winning trades, and you have to cut out your losses immediately if the trade is not working in your favor, so that you can protect your capital and trade if there are new opportunities in the market. That's it guys, thank you for watching, keep stocking.